What's up, YouTube family? My name is Dennis, and today I'm going to show you a energy stock that is paying some really good dividends as well as having some amazing growth over the last 10 plus years. Now, I'm going to also add it into my portfolio here today, so you guys are going to see that happening here in real time. Now, today's episode is brought to you by Earnest, so if you are somebody who needs to lower their student loan interest rates, check out the link down below for a free student loan refinance, as well as a nice little bonus for using my link down below. Now, as I mentioned, today we're going to be talking about this energy stock, and what I want to do is really kind of first and foremost show you my portfolio, because I am a dividend investor first and foremost, so I always want to make sure that I'm adding stocks in my portfolio that are, of course, focusing on dividends, but not necessarily the high yield dividends, because I'm long-term investing here. So what I'm looking for is a company that is paying out a good dividend now, but also has some really good growth opportunities for those dividends, because I also want growth entirely in the portfolio too. So if we take a look here, this is my M1 Finance investing portfolio. Right now I'm set to the day, so it wasn't a good day as of this recording. But what we're going to do is switch over to the All tab here, which, by the way, too, if you are interested in checking out M1 Finance, I'll have them in the link down below. It's my main app I use for creating a dividend income for the future. So I currently have $13,500 in this account, and it's doing pretty well. Now, what I want to do is kind of really make sure I manage my stocks here, because the biggest thing when it comes to my portfolio is I don't want to be over leveraged on the number of stocks that I actually have. And what I mean by that is, you can see here, my positions, I have 29 of them. And I don't really want to go over that. So I'm actually going to have to make a decision on whether I want to get into this new stock or potentially sell out of a different stock that I currently have so I can make room for this new one. Because for me, I think going over 30 is just too much for me. So I like this 29 or less number to kind of stick to. So what we're going to do is actually go and take a look really quick and see what's in my industries sector. Now, I mentioned earlier that I'm going to be talking about that energy company, and that company technically obviously doesn't fit in industries, but I'm going to actually combine the industries and energy sector to one, because as you can see here, I only have 3 stocks currently in this portfolio sector. So I have ADP, I have Lockheed Martin, and I have 3M. So all of these you can see here are doing okay, nothing too great. This sector is just doing, the basics essentially. So what we're going to want to do is kind of make a decision on which one of these 3 is going to end up going while we add in this new company. And of course, what we're going to do is take a look at this new company and then come back to these 3 and see which one might take the bucket while we add the new company in. So what I'm going to do is actually go ahead and load up my Seeking Alpha website here. I use Seeking Alpha all the time. I am not technically affiliated with them, but I get so much of my information for stocks right over here on this website. So this company I'm looking at is called NextEra Energy, ticker number NEE. So right now their current stock price is $290.28 as of this recording. And you can see over here, going through here, right now, year to date, they have an increase of over 24.27%, which is pretty fantastic. We're going to break down some of their other numbers here. So we're going to go down and look at their forward EPS is 9.14. Their forward PE ratio is currently 31.77. So it's a little high, but I still think that this is going to be a great stock overall. You can see their dividend rate right now is $5.60 with a yield of 1.93%. And they currently have a market cap of $142.13 billion. Now, this company themselves, if I actually, where are they? If I go down here, oh, perfect, right here it was. So right here, this company, NextEra Energy, through its subsidiaries, generates, transmits, and distributes electrical power in North America. The company generates electricity through wind, solar, nuclear, coal, oil, and natural gas facilities. Personally, for me, I do like the fact that they are focusing in on some wind and solar, as well as some nuclear as well, too. So for me, I kind of like that. Where was I here? It also develops, constructs, and operates long-term contract assets with a focus on renewable generation facilities, natural gas pipelines, and battery storage projects, and owns, develops, constructs, and manages, and actually operates electrical generator facilities and wholesale energy markets. In addition, the company also engages in energy-related commodity markets and trading activities. The company was originally FPL, but now has changed its name to NextEra Energy. So This company, you can see over here, just over the last couple of years, their actual revenue growth has been pretty stellar. But I, of course, want to take a look at their dividends because dividends, of course, are pretty important for us. But actually, before I do that, we saw the 1 year marker here. But let's go and take a look at the 5 year. Over the last 5 years, it's grown 190%. 10 years, over 429%. Now, obviously, we always want to keep in mind that past performance doesn't dictate future results, but this does, of course, help us and give us an idea of what we can potentially expect from a company like this. So what I want to do is take a look at the dividends, which is going to switch over to the desktop version. So we already talked about how the dividend yield is 1.93% and that the payout annual ratio is the annual payout is $5.60. We can see the payout ratio is 61%, which is pretty much on par with where we want to be when it comes to dividend paying companies. And then their 5 year growth rate right here is what I really like, is that it's at 11.51%, which means on average every year they increase their dividend by about 11.5%, which is really good on your money because if you own the stock, that means that you are going to be having your money worth more for you every time you get paid out dividends every single year as they continue to increase that, whether you buy more stock or you just hold on to what you actually have. Now, they've been growing their dividends for over 25 years, so any dividend investor might know that that means they are a dividend aristocrat. If you are increasing your dividends for over 25 years, that is what you are considered here in the marketplace. If you hit over 50 years, that means you are a dividend king. So for us, that is a really good sign. That means they are healthy, they are working hard to continue to provide for their investors. So if we go back over to the financial sector over here, we can just kind of take a look at some of their financial statements, but I do like to kind of look at their balance sheet as well too. Oh, let me go ahead and click on their overall actually. So if we go onto their overall, we can kind of zoom in on here and just kind of take a look across the board. We can see what their profit margins are. Let me go back there. We can see what their revenue is right over here as well, which is, of course is important. We can see their EBITDA, which is 10.17 billion. We can also see their cover ratio, which is 2.29. And then we can kind of just go around here and just get some really good information. They definitely have a lot of debt. They have over $46.54 billion in long-term debt. So that is quite a bit. Actually, well, that's the overall debt. The long-term is $42.67 billion. But still, nonetheless, quite a bit there across the board. We can see their average for their payout ratio is 60.75%, so that is really good for us. And then just kind of going across everything here, it is looking pretty solid. So I'm pretty sure that I want to go ahead and add this in. Like I said, I had to go through the process of figuring out which one of these companies I currently already have in my industries that I want to remove and replace it with this new stock. Now, again, I mentioned I know that this is technically in industries, but that also means I can go through the process and have this industry / energy. I feel like these sectors can work the same for me because I don't want them a large percentage of my portfolio, because if you look here, the industries currently is targeted for 7% of this overall portfolio, which means not as much goes into this one as, of course, you can see here, like my growth or my tech or my financial sector altogether, which, that's totally fine with me. So I'm going to go ahead and go through this process. So what I want to do, I already went through and, of course, did the research on all the 3 companies I already have. You can see as of right now, I'm actually up the most on 3M. I'm up about $17.93. That 23% is just a money weighted return, so it's a little mystique as far as how that percentage actually comes about, because even with the dividends that I've earned, if I scroll over here, you can see here my total gains for this, the market was $15.04, and then earned dividends was $2.89. So that 23% kind of just comes out of like a weird left field there, but that dollar amount is obviously still a positive dollar amount, but nothing so great that I was like super excited about. When I looked at the other 2 companies, even though they are performing not as well as 3M, I actually still like them a little bit more for what my goals are when it comes to building this dividend portfolio and having them paid out. Because like I mentioned, I don't technically need the dividends right now. Of course, they're nice, and I do reinvest them every single time I get them. But I'm also really focused in on having some growth in my portfolio, as well as dividend increases with their yields, so that way I can have more money for doing absolutely nothing, which is one of my favorite things to do. So what I'm going to do is I'm going to go ahead and remove 3M, and I'm going to add the Next Era Energy right here into this portfolio. So what we're going to do is hit on Manage Pie here. I'm going to go ahead and edit this here, and I'm going to go hit the plus sign. So let's go ahead and add the new stock in, NEE. So we're going to go in here, we're going to click on Add to Pie, close that off here, and we're going to hit that Done button. So what I'm going to do is I'm effectively just going to remove 3M, and then I'm going to take that percentage that I had on 3M, and I'm actually going to bump this up to about 30% for the 30% for the new one, and then I do have to lower the percentages on the other ones. Let me see here. So it went down too much. So right there, we're going to go ahead and confirm here. So what we now have is we're going to have the Next Era Energy sitting at 30% of this portfolio, or this sector, I should say. And then we have Lockheed Martin and ADP both at 35%. And depending on how everything goes, I might increase that or I might decrease it. We'll see how it goes long term. But I feel like it's going to be a good opportunity. One other really cool thing for us here. So if I go into my view details, I'll see 3M being sold. And then I'll see Next Era Energy right there with $216.17 going into it, effectively just selling off one and getting into the next. Oh, and one thing I forgot to do as well too, I'm going to go back in here and the Industries tab, I'm going to click on Edit Pie. And can I do it on here? Yeah. So it's going to be Industries/Energy. Can I not spell energy? Energy. Just in case anybody was going to comment down below beforehand. So there you go. That one's all fixed. Now back to where we were. I know that they are actually currently splitting their stocks. So let me see if I can find... If you're not familiar, stocks or stock splits are pretty much when a company wants to lower their actual pricing of the stock, but not necessarily their value. So it's kind of like splitting a dollar into 4 quarters. It doesn't actually change anything value-wise on a company, but what it does actually do is it just kind of helps lower the entry price for a lot of people. Oh, here it is. It lowers the entry for a lot of people, so it makes it easier for them to get into this stock. Now, for me, it doesn't really matter as much because I do fractional shares with like M1 Finance, which is fantastic. So that doesn't really pertain to me, but for other people that are maybe trading on platforms that don't have fractional shares, that can be a pretty big deal because you saw that price point of like 200 and some change. With this 4-to-1 split, that means they're going to go down to around like $70 per share. Of course, the dividend gets split as well too, so you don't get that full dividend anymore. It gets split up across the board. But whether you buy it before or after the split, if this is something you're interested in, definitely, consider looking into more of the information. Of course, always do additional research because your investing style might be different than mine. But if you decide to do it or you already have NEE in your portfolio, let me know in the comments down below. Definitely would like to hear from you guys and what you think. And while you're down there, make sure you hit that like button down below because it really does go a long way here for the channel. But for me personally, I'm excited to see where this goes. You can see right over here, it was September 14th. They announced their 4-to-1 split, and they are still raising their 2021 earning guidance. So that is some good news and good signs. Especially for a company that is really focused in on not just energy across the board, but really energy that matters for the future, which is like wind and solar, because I think those are going to be really critical in the near future and how we kind of move forward altogether. So it looks right here that the shares will begin trading on a stock split adjusted basis on October 27th. So again, just depending on when you're watching this, that stock split might have already happened or about to happen as well, because might as well get into that company. Again, whether you buy them now and then the split happens, it's still going to equate to the same thing for you. It's like I said earlier, it's quite literally taking $1 and splitting into 4 quarters. That's really all it's truly doing. But sometimes when stocks split, that does help it grow some value just because people think that it's healthy for the company to split. Now, both Apple and Tesla also recently split their stocks, and both of them had some really great results afterwards, and actually even beforehand because of the stock splits. Again, it doesn't really do anything different, but if it helps it grow the value of the stock and I'm an owner of that stock, I am still very, very happy about all of that, because why not get some more value, because everybody else is, wanting to buy into the stock itself. One thing I do want to mention as well too, if we go back to, I kind of like jumped around here. So if we actually go back to the portfolio stuff here, we take a look at the dividends. So I showed you NEE has a current dividend yield of 1.93%. But if we go to 3M, so let me kind of jump over here. So if we go to 3M, 3M actually has a 3.62 dividend yield. So you might have been thinking like, Dennis, why would you go ahead and sell off, one stock that has a higher dividend yield and go into a stock that has lower dividend yields? And like I mentioned, dividends are important to me and I really do care about them. But what also really matters for me too is the fact that I also have growth that comes along with it. Because if we go over here and look at the summary, and we look at the 1 year. So 1 year so far for this stock has been 4.11%. If we look at the 5 year, it's only 11.28%. And if we go to the 10-year, it's 80.48%, which is actually not too bad in the 10-year span. But across the board, you could see how every year, the other stock has been doing far superior when it comes to growth overall, which is still really important. And then that dividend yield is growing at a healthy pace. Even though the 3M dividend is growing pretty healthy here in the 5 years, I believe the last time it had a growth, oops, let me close this off. The last one it did, so back in February of 2020, granted, things were going on in the world, but still, this was actually on the 4th, so before everything kind of went downhill. It only increased by 2%. So even though the 5-year dividend yield looks great, the most recent one was only 2%, which is not even keeping up with inflation for the most part. So that's something to consider is this 3M company going to slow down on their dividend growth? So that way, it's not going to have as much of a annual increase versus something like NEE that's going to potentially have a 10% increase year over year if they continue to do what they're doing. Now, of course, that is all speculative, and I don't know how it's going to end up across the board, but this is how I feel I'm going to take my portfolio and hopefully increase the actual yield long term while also growing the capital that I have in the account, so that way it's a win-win on both sides. Now, as I mentioned earlier, don't forget to check out the link down below if you need to refinance your student loans and hopefully save some money that you can utilize to invest more into these different stocks we talk about here every single week. Now, I want you to keep on watching and learning more here on the channel, so check out my next video right over here. My name is Dennis, and I will see you in that next video.